Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So the format of the show is I start out with a lesson. I try and keep it short because I get a lot of symbol requests that come through during the week. And so the bulk of the show is me going through those individual requests that come through. Those requests can be, they could be the indices, any indice that you have an interest in, or an ETF. Or obviously individual stocks, since it's a stock talk show. But I do try and keep it open, and we want to know what the indexes are doing, especially in the environment we're in. But I like to be bottom up and go through the individual stocks as much as possible, especially when we can get a broad array of different sectors. I think it can give us a really good feel for what's going on. So in the lesson today, what I want to do is go into the idea of multiple time frames. And this is a big thing that I talk about in my book as well as my course. It's sort of the cornerstone of what I'm trying to accomplish when I'm teaching someone how to look at use technical analysis to their advantage. So I'm going to go into what I would consider to be the first rule. In my book, I call it is the first rule of multiple time frames. So let's go and look at the agenda real quick. And that number one rule, I really want to talk about price structure and how it can take place in each time frame, as well as looking at what that price structure creates in terms of support and resistance. So I want to go into that and sort of explain how this can help us define the trade. If we're looking to do a trade, having this information can be a huge advantage. And then I'm going to go through all the symbol requests that came through. So let's go ahead and get into this lesson now. Okay, so let's go into the chart of Microsoft and think about this in terms of multiple time frames and what that means. What I like to do when I teach this part of multiple time frame analysis, especially this first rule, is have a zigzag up. And what I want to explain here, and it's so much easier to see with the zigzag, is on the monthly trend, it's clearly a pattern of higher highs and higher lows. We don't have a reversal of the trend at this point. Now, you could argue that this was sort of a deep pullback after this move to the upside, and we've only retraced maybe about half of that move after a deep decline. So, maybe you could say that the trend is in question, but when we look at it from a zigzag standpoint, we don't have any proof yet. This hasn't turned down. We haven't made a lower high. All we have right now is higher highs and higher lows. So, we want to use this to our advantage, but more importantly, I want to look at this in one time frame, and that's the monthly, and then I want to go look at it on a weekly time frame and look at how we're getting completely different feedback. Since the beginning of 2022, we turned down early in the first quarter, and we stayed negative until the early part of this year. Now we're starting to show signs that we're reversing this trend back to the upside. We went to a new low and then immediately to a new high, and then made a higher low and then a higher high. And now we're trying to make another higher low here. And I would say that would more, if we can do that, if we can pull that off and make another higher low, we'd have that pattern of higher highs and higher lows. We're very close to reversing this trend back to the upside, but look at how bearish this was for pretty much the entire year in 2022. We don't have that. That's different feedback than we were getting on the monthly chart. This chart stayed bullish the whole way. This trend was bearish. Now, if we go and look at the daily chart, look at how much more noise there is. You see this reverses down and then reverses back up, or at least attempts to, and then immediately reverses back into a bearish trend. And now it's trying to reverse the trend back to the upside. There's a lot more zigs and a lot more zags on this time frame. And so I wanted to use this as an example for part two when it comes to looking at what the number one rule of multiple time frames. So rule number one has two parts to it. The first is that each individual time frame has its own structure. I've got an uptrend here. I have a trend that was down that is just starting to reverse right now, and it's very close to kind of being a little bit more confirmed if it can make another move to the upside. The daily has been moving up and then moving down. Right now, I would consider it to be in a positive trend right now. The hourly is actually in a bearish trend. So if I go and look at each individual time frame, they have their own price structure. And you want to be able to recognize that. You need to understand that what we're trying to find is a pattern where we're getting a reversal in one time frame, and then we can get potentially a pullback or even something going counter to that in the lower time frame, and wait for that to reverse back in line with the higher time frame. So that's kind of the one thing that you can really get out of this first rule. The second rule is, because each time frame has its own structure, each time frame also has its own support and resistance. So I've actually drawn in these levels where we're reversing. You see these areas that are causing a reversal, these reversal points. I'm drawing in horizontal lines. And what I'm trying to explain here is that these are key levels. So if I do this on a daily chart, which is what I have, if I'm going to trade off the hourly or do an intraday trade or something like that, or if I want to do a daily and an hourly, I want to know where my windows of where I have open windows to trade. So I can look at this and say, I've got open window between here and here. I don't have necessarily any resistance. If I turn up, I know I've got a little bit of a window to trade. If we break below this little area here where we have some highs and lows that have been connected, then I know I've got a new window going down to this point. Okay, so we want to know, and you want to go back and kind of look at these key levels and draw those lines going across, and you can see where they can add value. If we get a move through this area and we get an open window, we know we can trade in that area on the smaller time frame. So you want to think about it in those terms. Number one, what is the structure of each time frame? And then the second is, what support and resistance levels are those areas creating? So, I mean, I could go back and look at the monthly chart and say, you know what? I mean, this was a pretty key reversal point. This was one of the last key reversal points from the monthly chart. And it showed where this basically came back into that area and then turned up. So just keep that in mind when you're going through and looking at multiple time frames. Realize that each time frame can be going in different directions. And secondly, that each look at the higher time frame to figure out where the key support and resistance levels are and how that can help you define a trade. All right, let's go ahead and get into the symbols now. Just briefly, my services can be found at rabilstockresearch.com. As well as information on the course. And just to give you a little idea, I've gotten a lot of feedback on the course now, and it's been universally very, very good. I'm going into a lot of detail that you're just not going to find either in any of the videos that I do as well as in the book. So if you have an interest and you want to take a look, it's on the services page at rabilstockresearch.com. Let's go ahead and get into the individual charts now. Okay, so as we start going through the symbols, I actually picked out the XLY because I had a question about how to look at individual sectors as a way to kind of identify stocks. And the question was really more related to kind of a top-down approach and saying, if I look at the strongest sectors and then go inside those sectors and look at the strongest industry groups, and then go inside those industry groups, and then I look at the individual stocks and I'm looking for the strongest ones there. Those are gonna, the person who asked the question said that those stocks have already kind of gone. They're really too late in a lot of ways. And I couldn't agree with that more. And it's actually the reason why I call myself a bottom-up investor, because I would rather look at the individual stocks, because I can tell you for a fact, after doing this for over 30 years, that the individual stocks in a sector that are going to lead after a turn to the upside are gonna turn so far earlier than the sector will, or even the industry group. So you need to be aware of that. I just want to give you some examples and look at this. This is not one of the strongest sectors. This is consumer discretionary has been a horrible sector this year. and it's still hanging around its lows. Now, it does look like the momentum has started to drop here. This last new low really didn't get a lot of confirmation on a ADX basis at the beginning of the year. But we're still below a declining 18-month. We're not showing any real signs of relative improvement. You see this lower high, lower low pattern on a relative basis. But this is what I would tell you is if I go and start looking at some of the individual patterns, there are some incredibly attractive setups starting to develop. BorgWarner, by the time XLY is one of the leading groups, is going to be gone. It's going to be so far away from its base or support. I just don't see any possible chance that you're going to have an opportunity to get in there. So I can do the same thing in something like LVS, Las Vegas Sands. It's already started to move. I mean, this is the relative line to the S&P. Think about what this would look like relative to the XLY. So, when I start to look at things this way, what I do is I look at the sectors, and what I do in my reports is when I look at what I do is I use a composite chart. And a composite chart is where you take all the individual stocks and look at, as a group of them, how many of those are in uptrends. And when that number gets down to under 20%, then I know I can start hunting for stocks that are showing signs like this in that sector. All right. As opposed to looking for the strongest sectors, I would actually look for ones that have gotten overdone to the downside and now look like they're finally starting to bottom. They can start to show signs of relative strength off of a bottom. But if you're looking at the ones that are the absolute strongest, in a lot of cases, you're gonna be late when you go top down that way. So I hope this helps explain kind of how I look at things. Now, I don't have a problem looking at the strongest stocks, but what I would do is look at it more from an emerging relative strength standpoint. I did a lesson on this recently, I think it was last week, and that the emerging relative strength patterns in the sector will still be better than just looking for the strongest sectors. All right, so think about that as you're going through these. All right, let's go through. I got a lot of symbols to go through, and I have a few more lessons I have to give in some of these stocks. So the first couple have lessons to go along with them. So let's look at this Shopify. So the question was, the MACD was coming in here and pulling back towards the zero line. We didn't have a lot of strength in red DI, and so they're saying, is this an opportunity to be a buyer? And what I would say to you is that this is too violent. The price action's too violent. Always start with the price action. When you have a massive gap to the downside, if you look at what this did, it turned the 18 MA down. Okay, I'm not really interested in buying on this time frame if the moving average is rolling over and it was just broken and it's rolling over. I don't need to look at these indicators. I don't need to look at MACD. I don't need to look at ADX. I can just focus in on the price action and say, you know what, I have time with this. What I would actually be looking for here is because the MACD is now overrunning the zero line, I think you have a long time in terms of waiting. What we want to do is see if this can hold the 18-week. If this can hold the 18-week on this pullback, then the daily chart will mend in a way and start to turn around in a way that'll look a little bit better. But it's going to take a little bit of time at this point. The only other point I want to make is you see this big green. So we got a couple big green bars to the upside right before the gap down. That's really helping green DI, and it's causing lag to the ADX. So you have to understand how it's calculated to recognize that, yeah, this is a really ugly drop, but it's not really being reflected in ADX, and it's a lagging indicator when there's a lot of volatility like this. All right. So I'd be watching this 18-week, and if we don't see signs of improvement, or if it breaks that, then I would just kind of take it off the list for now. I think it might take a lot more time. It didn't quite make it up to the 18-month line, but it had a pretty good rally in an ABC format without a lot of improvement in momentum. So this was a question on the short side about fading this because it got extended away from the 18-week. Do you see how this had gotten distance away and there's room for this to pull back? So I don't have a problem with that trade. I've done several videos and several lessons on how to play that using 3 time frames. I like to use 3 time frames when I do that. That's one time frame is separated away. The next time frame is losing momentum, and you can see that kind of in MACD. And then the third would be the trigger. So I would actually go down to an hourly chart and look for a reversal signal. Here's one thing I would tell you though. If the ADX is rising like this. You see how it's rising on the monthly chart at 33 and rising on the weekly chart at 36. And then it's in a power trend because it reached 60 on the daily time frame. I'm not messing with this. When you have rising ADX lines, that's actually incredibly important. The higher time frame being rising, you don't want to mess with that kind of strength. Look for ones where the ADX line is rolled over, or it doesn't have this kind of strength associated with it if you want to play that kind of a retracement setup. So I'm not saying this can't work. I'm just saying if I'm going and looking, I'm not looking at this divergence in MACD when there's this much strength in the ADX. All right. Okay, let's look at TPR. So this got requested a couple of times, and I really like the looks of this. This has a pretty attractive pattern. Look at how the monthly chart, we had pretty good price action crossing back above the 18-month line. And now we're starting to pause and pull back. And even though the ADX isn't above 25 here, we got green DI going again. It took out 25 and it did take out the prior red. We got MACD back above the signal line. It held the 0 line. So there's some improvement there. Now, there is some resistance up at 50. So the way I would look at this is I would only play this off of a weekly and a daily. We're pulling back towards the 18-week line, and it's consolidating in a really healthy manner with very, very strong ADX condition, and I like the looks of the MACD. On the pullback, we don't have a lot of strength in the sellers. You see how red DI has not caused the ADX to go up because during this is during the decline phase. MACD is sitting right at the 0 line. I mean, you could consider drawing in a trend line here and watching and seeing if this just keeps cupping around right at the 0 line. You can take a trend line break or basically across a 45 as a trigger for a weekly and a daily, but you have to use this 50 area as your target. I would at least want to be able to take one target and possibly 2 with the risk reward at $50 before I do this trade. If it's a 1-to-1 to get to 52, right, I wouldn't take the trade. But you should be, if you use the hourly chart, you should be able to pull that off. Okay, another short pattern is this LTHM, something that I recently highlighted, I believe, in my reports. But so we had a decline, a move to the downside, and then we rallied up to a declining 18-week. Now, the one thing that's missing here, now MACD definitely confirmed, but we didn't have really good ADX condition. And the other thing I'll say is we've got a low at 20, a low at 20, a low close to 20, a low just underneath 20, another one just underneath 20, and then a reversal, right? I mean, look at this breakout from 20. We know the target's 20. So we can't play this. We need to play this off of a smaller time frame and look for an entry pattern. So this was actually a pinch play. You see how this rallied up for 3 to 4 bars and the MACD stayed below the signal line after crossing through the 0 line to the downside. So I like that. So what I typically would do in this situation is look for a second pinch. Now we crossed up and we got basically a sideways pause. And sometimes I'll call this a pinch. And if you look at the histogram, you can see that it was actually rising for a few bars. This does constitute a second pinch on this time frame. Even though this was just a sideways drift, I would still consider that a setup. Now, it's unfortunate because of the way this triggered. If this would have just come down and broken down, I think you would have had a really good setup here with the 2 time frame pinch play. But because it gapped, I think, it would have been a tough play. And that's part of this type of environment that you're dealing with. But I think that was a good find. You could have been a little bit more aggressive with the divergence play when this made a new high and then gone down to an hourly chart and look for a little bit better entry if you wanted to be a little bit more aggressive. Because if you notice, when this went to a new high, we didn't have strength on this rally. So Little things like that can help you kind of get a little bit of an edge on your timing, get a little bit more aggressive. And that would have been a really good time to be thinking about getting in somewhere in this 24 and a half area prior to this getting hit. So anyway, those are the types of things I think I'd be thinking about here. MFC. So yeah, my big concern here, I do see the fact that this ADX line is showing a lot of strength here. And it's rising, and we have a low ADX condition on this time frame. So it's an emerging pattern that has some potential, but look at where this is situated. Top. And the person who asked about this brought this up. So I'm not interested in playing a weekly daily pattern, especially when we're stretched away from here. What I would be willing to do is if this forms some kind of an opposing trend pattern where this corrects back and this gets closer to the 18, and this is still showing this strength here, then I'd be willing to play it as a probe trade thinking, you know what, the potential is that this is going to break out. But I don't want to do it here. I don't really have an entry. I wouldn't do it off the daily, hourly, right up into this resistance. So I need some kind of a pause or a pullback in this pattern. It's just a little too close to resistance for my liking. Okay, let's look at AMBC. So, this has a pretty good look to it. You can see the pattern of higher highs and higher lows on the weekly chart. We got confirmation in MACD on this last peak. We have ADX confirmation showing pretty good strength, and we got a pullback here on this time frame. So, typically the way I look at it is if we get a drop and it overruns here, I'm looking for some kind of a second entry. But the way this played out is it moved up and then it paused and walked along the 18. So on this green bar right here, we had kind of two bars sideways holding the 18, and then we tried to move up and came down and tested the 18 and then sort of tested again here and then turned up. I think you could start to think about taking this trade right here. I would view that as like it's almost like a pinch play. It just didn't show up in the form of lower highs. So hopefully that makes sense. It had a inside bar and then a lower close kind of reversal, and then it reversed back up with the MACD holding throughout. So I would be interested in playing that overall. Now, this has the same problem as this MFC that I just talked about. Look at this resistance here. So if I'm looking to play a weekly daily, I don't typically want to do it into a resistance zone. I'm looking for those windows. I want to get a window through. I wanted this to break out and then play the next pullback. That would be my preference in something like this. So the pattern itself and the trigger setup, not bad. But for me, I probably would not take this trade simply because I think there's just a little bit too much resistance here. I'd want to trade the window from getting up through 17 and a half up to the low 20s. You see that next area is around 22, 23. Then I can trade this off a weekly and a daily in that fashion. Freeport. So really strong move off the 40-month moving average. MACD came all the way down and got pretty close to the zero line. We didn't get the red to even overtake the green on the monthly chart. And then we got a really strong rally that got it back above the 18-month, and now that line is rising. So that's a pretty encouraging sign. What's a little discouraging is when we look at this pattern, we have sort of a violent bar and then, a retracement back and then another violent bar. We made it through this first bar, but we've used a lot of energy to get back up to this original kind of breakdown area. And so that's the only cause for concern. So I got to make sure if I do this trade that I've got room up to this prior high for sure, and I have to have a really crystal clear setup that looks very, very attractive. Now, I love the look on the weekly chart. This moved up to the upside and has pulled back to a rising 18. You've got a pinch play developed, and MACD looks good with a confirmation, ADX confirmed. And we're pulling back, and we've got an opposing trend with the 18 below the 40 on the daily. We have overrun on this time frame. So that means I am waiting for more confirmation here. We went into the zone. If we can come out and test this low and then turn back up through this prior high and have green DI kind of confirm that, then I would be definitely willing to take this trade for a move up towards this prior high. I wouldn't be as concerned about this problem area that it failed at the last time. So how this handles this area and the trigger will be in other words, if I get a really good trigger, I want to take this trade. So Fiserve, I like the look of this overall. I probably want to see this get through this peak here and this kind of resistance area if I'm trading it. I don't have a problem with this, even though this crossed down. You see how the MACD crossed down? Because we already ran up, kind of failed at the midpoint, and then came back and tested the 18 again. You see how that happened? We have strong ADX here, so we can still play this. I just think you have to exceed these 2 bars here before being a trader in this. I actually am more excited about the potential of this on a bigger picture. This is a huge turnaround, and if we can get a little bit better consolidation on the weekly chart, I would actually be a lot more attracted to this as a big picture play. CAR, huge move on the monthly, and we've spent all this time, the last year and a half, working off this kind of overbought condition, consolidating, have a really strong momentum condition. But this is really weird. We've got this move down and then a move up. It's wide and loose. I don't like wide and loose when I'm trading these kind of patterns. We've already broken the 18, so we don't really have anything set up here. I want to see this quiet down a little bit before I'd really be too interested at this point. Thanks for watching the show. I've run out of time, but if you have any new stock requests, send them to stocktalk@stockcharts.com, and I'll try and get them in the following week. So have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.